Yo, good morning, everybody. September 9th. Kyle, how you doing? Vivian, Mark, Tanbay. Hey, good to see you guys. So today we're going to go over our Monday morning mindset. And so everybody, let's get everybody a chance to get in. We start our Monday morning mindset call to kind of get our week started and kind of get it started on the right track because trading is about 70-80% mental. So we want to deal with our, we kind of want to just get a reminder and a refresher on our mental aspect. And so on this call here, I'm going to go over, normally we have our Mastermind Pro and we have our video. I think I'm going to walk through some of the things that I was kind of putting together to kind of make it a little bit more, one for interactive and two, go over some of the pillars that we actually imply with our alligator strategy. So, these calls are recorded and I'll share these calls with the group after the call, after it gets recorded. But this one, normally we have a video that we like to go through. I'm going to run through some slides, some images that I put together, and I'll share this with the group because I'm going to actually create a presentation out of this one. So normally on Monday morning, you guys don't hear my voice as much, but we're going to walk through the different pillars of trading that will, really establish our mindset when we're using Alligator, when we're in DCG. So right now, to get through it, let's start. If everybody can see my screen, let me know you can see my screen. Just type in, make sure that you guys can hear me and can see my screen correctly. So I'm looking into the, all right, see the chats coming in. All right, awesome. All right, so let's get started. So the three pillars of trading, for successful trading, just not just three pillars that we picked out of nowhere. This really comes down to the psychology, being in, standing in the trade, being able to handle the mental aspect of trading. That's one aspect that's overlooked, and that's why we have these Monday morning mindset calls. Then the market analysis and trading systems, we have our base, our foundation, which is the alligator using moving averages. The market analysis, you have Nick, you have myself, you have, we have our research. And then the last is the money management. You can't be a successful trader without managing your money. And, the money management comes down to risk management, exit strategies, a few things we're going to talk about. But other than that, you also have three types of traders. If we pull it out, you have the beginner trader, a younger mentality, a younger guy that has a smaller account, which we can call him beginner Ben. He's it's going to be difficult because he don't have a lot of capital, doesn't have a lot of experience, and so this is a different mentality that you're going to have a beginner mindset, and which is totally fine. But you as a trader, you have to accept which category you fall in. Now just because he's young, maybe 17, 18, doesn't mean that a person is just starting at 30. Doesn't mean you're old. You're still young too in the trading. So the craft is more important than the profits when you first started. So if you're in DCG and you're in a group, the craft, the process is more important than the profits because you're beginner, you're just trading. Then you have the professional, right? He has a large account. He be managing other people's money. He's not worried about the trades in and out. But when you're in that situation, and we have some of the guys in our group, we can kind of consider them the manager, right? They own a business. They're already successful. They're risking some of their money from the business, or they're risking money, which is their money, but it's coming from a different source. They got to be careful about losing their money and losing streaks. So, risk management becomes a problem. And then you have, we just gonna call her software Sarah, which is she's a, or he is just a super busy family person, and they don't have a lot of time to trade. They could be like one of our members here, that grandmother that has kids and has things on the weekend, and they've always been successful, but they don't have a lot of time. They don't have a lot of time in trading, so there's a different style of trading that they're going to have to implement based on the type of busy person they are. And then you have, Bo Bernard, right? He's a guy that, he's ready to quit his 9 to 5. He needs a certain amount of money. He's coming in with money, but his expectations are like, I have all the time in the world, and I'm gonna put, put 100,000 in, and he wants to live off his trading, but then he has the pressure. He has the pressure in trading to make it work and to force it to work, because he has a certain amount of need, and he's going all in on the trade. So these are the characters that we're going to talk about, and establish there's risk management, and there's everyone's. So what you notice is that everyone's in a different situation. Everybody that's the different characters, the software Sarah, the manager, everyone's in a different situation as far as the aptitude that they're going to come and they're going to bring to the trading table, and you are too. You are in a specific situation, and we need to manage that. So those 3 characters, then they have personality traits. So we have to manage your personality traits. You got a guy that's stubborn Steve. He doesn't want to say he's losing. He's going to use his strategy. It's going to work. And this is for your trading plan to identify some of the characters that you have, and it's my job to help you kind of pinpoint which one you are, because I'm on the outside looking in. Then you have risky Rachel that just wants to risk it and take a trade no matter what. And then you have conservative, and sometimes I fit in that category, that I'll get out of a trade just so I can go to sleep. So they all have their advantages and benefits to trading, and our bias is to prevent some of your characteristics flaws from really destroying your trading. So when we talk about the trading, there's pillars of trading. We just went through characters, and we went through the different personalities, the different roles. You look at this screenshot. The must-haves is the money. You have a system that you got to be able to stick with, and then the money management. It's not like gambling and roulette. It's a string of losses and poor money management, and desired outcome. It could be explosive, right? It could be explosive. So the number one thing after you have a system and you manage your money management, is you have to preserve your capital. And so we have a trading system that works. The alligator system using moving averages, it works. The psychology is something that we have to work on. That's why we on these to manage the psychology of trading, right? And string of losses and poor money management, that is why traders fail. They take a few losses and they have poor money management. So we'll talk about the big aspect, the biggest aspect of trading. While you're learning, it's all about preserving funds. And we can do that. Money management is, we talk about it all the time, is to keep a diary of the trades, because determine how you're going to trade just by observing you from a coaching call, from a standpoint or participating in a meeting. I can't see how your schedule, I can't see how your software Sarah, your manager, I don't see how your schedule, how is it impacting your trading? Because those are things outside of what we normally talk about. So your trading journal, a diary of trades, is for you, it's for me, it's for, you know, the money management of your account. Because now you can actually track the different days and what's going on those days, and gives you a preview. So this is one of the key indicators of if you're going to be successful, and if how much a person is going to be able to help you. When people aren't able to help you, it means that you're not keeping a journal, and there's nothing really to review. There's no that's the facts of what you've done. Even when you're starting, and you're going through the process, is keeping the journal. And everyone has a problem with doing that because, for one, they say they're too busy. Right? So if you can't take the time to just write down the trades, which we're using, the Google Calendar is a strategy I showed you guys last week, and that's something that even just the calendar itself will help. All right, so keeping your emotions in check. This is on the psychology aspect of it. Is, for one, you got to be realistic. You got to be realistic of the time, the account that you're trading. And then, the beginner, he's coming in and says, hey, he's going to manage the process. The person that comes in with 200,000 and they haven't, really got the system down, it's like, you don't need to put the 200,000 in. We need to be realistic and to say, yeah, I may need hope. I may need at least a month to observe and see what's going on and how the group operates before you come in. Keeping a diary of your trades will help you keep your emotions in check. The rules before entering. This is something we do, in the mastermind report, is we have the rules established. Okay. And if you're missing these three, if you're not realistic and you can't keep your diary trades and you can't go through the checklist of rules, then you have to stop trading. You have to stop trading at that point. Because the next step is you're going to be counting your money and seeing how much you're making, but you're missing these rules. So, if you're counting the money profits and then you're missing the other steps, that's going to be a detriment. And then, this is where it leads of sound money management, being realistic, keeping the trades, setting up your rules. This is going to allow you to practice, money management, which the three pillars, money management, is what's going to keep you in the game. So when we talk about systems, we use the moving averages, right? This is our system. Now these indicators, statistics, force of index, all these different indicators. This just shows you that, walking the dog, these are all your friend, but it's not one. Not one indicator is gonna be the saving grace. Our systems are using moving averages. It's a good system, and over time, the trend, you'll win. But you can use, the indicators are all just like dogs. It can be your best friend, but it's not just one. You can use multiple indicators, and those are used for the trades. What we do is we trend. We try to find the trends, and the trends in the alligator is using moving averages. And so that is our system of using moving averages to actually get in a trade a little bit longer. So even though we're day trading, there's different styles to do it. There's not one indicator that you're gonna, base it on, but we're gonna spot overall the trend. And so when it comes down to increasing your odds of winning, increasing your odds of making money, it's just another, chart. Is sometimes you may just need a bigger fishing rod or a bigger pond. And so we'll look at the day and we'll look at the week, and so for the alligator, most of you guys know that, we look at the different time frames. And so when we need more time to make a better trade, then we use a bigger time frame. Last night I sold sold and I was looking at the day, right? Because I know that, hey, I think it's going to drop overnight. For the week, we still think we're going to, we're still long. So when you're trying to catch bigger fishes and the bigger trend, you give yourself more time. All right. So more time is what's going to allow us to catch the bigger fish over the period of long term, especially being in crypto. So the perfect system, everybody has a trading system, and on different days, your system is going to show you different things. On a week, it could be up. On a day, it could be down or up. And different times of the day, we're going to go long or we're going to go short. There's different times, but you got to see if you're trying to catch the big fish, you may be in the weekly side. If you're just fishing and, a day trader, your system is going to be on a shorter time frame. And so that is just a reminder going into this week is that, we are looking at a weekly trend. Our 5-day system is based on a week. All right. And so when you're looking at your trading system, your trading plan, not that it's a, you're going to look at the trend as your friend. Buy low, sell high is what you're doing when you're entering the trade. This is determined of when you're going to enter, and then allowing your profits to run. So, last night I wanted to sleep because I'm conservative. I'm the conservative one, but I was in Atom and I sold it like 255 or 260. Right now it's at 280. And I've been saying all week that, hey, we're going to stay in it for 5 days. Well, I just wanted to lock in profits because I was in BTC and I was in Atom. BTC was down a little bit, but I was up overall. And so for me, being conservative, I sold. But the three things that you want to identify, even for your trading, is allowing the trend to materialize. You get into the right. First of all, if you're in at the right price, we're in the Atom at 2, right, and it's at 280 right now. So that's almost almost 50%, 40% gain, in 3 days, and that is letting your profits run. So it's just a reminder, and even for me, if I know my personality is conservative, it's those are things that you identify, and so this way you can check the list off of which one you are. Now, if you're a risky trader, and then capital preservation is your number one goal, you can't be risky and have capital preservation. So you want to actually fight that and put capital preservation up as your number one thing, because I'm going to show you a slide later that's going to show you that the number one key to trading is survival. So me selling early, even though that we know that I sold early, the number one key to trading is to stay in the game, to survive, to not blow the account, to keep your funds, and then if you can survive, you'll start getting steady returns. So even though I sold early last night, the goal is to have steady returns. And then the third goal is to have the high returns, right? That comes after surviving. The first thing you want to do is survive. So if I'm up in the trade, the first thing I'm thinking of is surviving. All right, I can survive with profits. I can never go broke taking profits. Now, steady returns is something that gives me confidence. So even though I sold last night and I woke up this morning and says, oh man, Atom is up to 280. But then I says, oh man, Bitcoin went down to 10.1, right? So I sold at 10.3 and I sold it ATOM at 260. So the steady returns and survival, I accomplished that. The high returns, I didn't get the highest, but I still made a return. And that's how you have to look at your account. You look at your account where you're not gonna try to risk. Now, these numbers are a little bit low, but enforce with a stop loss. Stop loss was in place, and then you only move your stop in the direction you're going. So if you're going up, you want to move your stop up. So I started adding with a $2 stop loss. Then I went to 230, Then I went to 250, and then at one point I see it go to 270, 280, and it came back down, and I didn't move it down. I just sold. So that is a way to manage it. So we go back to the money management. Now there's different. We talked about the types of money management. Risking 2% of a loss, 2,000, which is if it was $100 and you risk 2,000, I always say 20% is okay. But then they're taking a stop loss and a lot shorter. This is probably something that we have to work on with each individual person of how much they're trading with. And it's really based on your system, based on your character, your personality. Because a old trader, and this is something we have to how much you're trading with. But if you're conservative like me, I can go in with half my account, and because I know that I'm only going to take a smaller loss, or I'm going to sell early, or I'm going to take the early win. So it's really based going back to your personality, and we figure that out when we do your trading plan. So cutting your losses short. The notion of R is the notion of risk. You define the risk before you enter the trade, and you define who you are and your personality and what kind of schedule you have before you enter the trade. Those are all things that you have to account for. Who you are as a trader, what kind of schedule you have for this week. Are you software share this week? Are you manager? Do you have a lot going on and you're not gonna be able to trade a lot? You determine that before you enter the trade. Don't get in the trade and then tell me that, oh man, I've been busy all weekend. It's like, well, I didn't know you were gonna be busy all weekend. So this is something that this Monday morning you have to determine that. And if we're in a swing trade, everyone this week should be able to be in a swing trade because we've planned this in the beginning of the month. And so we should have planned the risk, the amount of money that we have in a trade. All right, we know we have 30 minutes for this call, so we're 8 minutes from our 6:30 time. So I actually posted a screenshot of trading for a living. It's a YouTube. It's in our Facebook group. And in that book, it goes through a lot of different, every one of these boxes is a point, is a chapter in that book. So that is something that you can review. And so the exit strategy, I was just putting this out there, trading, when it comes to trading, the exit, it's not a marriage. You're not married to anything that you enter into. This is what makes it different. We can change your mind when it comes to exiting, but you want to have an exit strategy. So just because you like Atom or you like ETC, like ETC was our pick last month. And then I have guys now that's like, oh, well, it's not a swing. It's like, no, it's a day trade now. We were married and we got divorced, and we have to exit. We have to leave that trade at some point. And so when we leave that trade, the exit strategy must match the personality of the trader. When you marry, when you buy a trade, you have to think, well, how's this exit going to end? How's this marriage going to end? Because trading is not a marriage. We were only in for the money. And so at some point, Adam last night, I know that it was going to continue to go up. I'm using it as an example. But at some point, I was going to have to exit. And I exited a little bit early because I'm a conservative guy. And I wanted to make sure that I have profits. And so that is part of it is, you're going to have three types of exits. The volatility exits, when you see the market moving, it might be a time where you just say, hey, it's time for me to go. Or you're going to give yourself time, what you're doing on the swing trade, saying, hey, after 5 days, I'm thinking about exiting. Or you say, I got 8-9%, and it's time for me to exit. So I think I have guys. Mark asked me 2%. was low. Yeah, because everyone has different situations, and you know, for 2% on a day trade is different than Tabby can't hear anything. Everybody can hear me, right? I'm looking at the comments. Yeah, so on 2%, it's low if you're swinging, but if you're day trading, you know, that's based on your strategy. I like to go in, you know, I'm willing to accept 5, 7, 8% because that's the percentage, and that's based on time. So I don't have time to I don't do the time thing where it's like I can get stopped out multiple times in a day. So if you're at a 2% stop loss, then it's like, well, how many times are you gonna be able to get back in? So last night, if I exited Bitcoin, I need more time to get back in. So that is based on your trading plan. You know, a lot of my exits are based on time. You know, 2 or 3 days at a time, and that becomes part of my strategy. Is that I don't enter trades in unless I know that I have a little bit of time to be in that trade. So I don't really do the day trade. You know, I'm not trading just for an hour. I'm expecting to be down sometime in that trade, but I'm also expecting to take profits. So, you know, these are some of the exit techniques, and you can pick one, you know, based on the trade before you go into it. Okay? And so, based on what Mark just sent me in the chat, you know, you're going to have different outcomes based on a different personality, the different risks. You know, here's a person, you know, here had more trades. He had the same amount, 10,000, and his loss was at 2. And so he took a bunch of different losses, and it was 20% of his count, each one. And he checked early. He lost all his money. This person had different risk loss, you know, and they were risking, you know, less than 10%. And so 1,000. And then, so they were able to trade longer and basically had a longer trend, a longer period of time in the trade. And over a longer period of time, they were able to profit more. His stop loss was shorter, you know, at 2%. And he was able to trade longer, but also, you know, his gains wasn't as big. And maybe it was a little more, you know, a little bit easier for him to stay in and take more smaller losses. Whereas, you know, she took bigger losses, but then also had bigger gains and risked more. This guy was just, you know, risking and having larger stop losses. So this is what you see after your trading journal. You know, we try not to get zero. You know, we're basically trying to get in and say, you know, survival, taking, you know, preserving capital. So let's see. So, you know, so what matters if you're looking at this is position size. You know, the position size is what is going to help you, not the percentage gain. I mean, percentage loss or gain, but the position sizing of how you're going into the trade. So, you know, if you're not, you know, over outsides, and then that means that the gains, the 2% could be a lot more based on the size. If you went in with the entire account, then yeah, 2% becomes a bigger loss. 1,000 or 5,000, it becomes a smaller loss. And so you may be able to take a bigger, you know, a bigger spread to stay in the trade longer. So Stubborn Steve, always risking the same amount. You know, he's going to lose, you know, the same consistent amount. Risky ratio is based on total profits, and maybe she's going to adjust that. You know, the conservative guy, he maybe, you know, is going to go in smaller trades and he's going to get smaller returns. But over the long term, it's about him profits. So we got a 1 minute left here. So the markets, we're actually going to let's stop it right here. You know, it's never going to stop changing. You know, you can adjust. You can adjust the trades and adjust your strategy based on the time that you have and experience you have for that week, right? But you're going to be predetermined that in the beginning. So with that being said, I'm going to share these slides. You know, this is our Monday morning mindset call. You know, so one of these slides are going to resonate with you somewhere. And, you know, we can discuss this on our coaching call tomorrow based on your specific plan. And then we'll have a meeting to talk about, you know, what's going to help you, right? But going into this week, you know, I want everyone to, you know, identify you have available. You're going to plan to say, here's what I'm trading. What I'm trading for this week. All right, guys. So thanks everybody for joining. I'll hit my camera back on, and we'll record this, and we'll share this with you guys. So if you guys need to watch it again, I try to do exactly 30 minutes, exactly on time. I want to occupy your Monday morning. I want you guys to have a good week. I think we're going to have a good profitable week this week. You know, the market did exactly what we thought it was going to do. Last night it did dip, and it's coming back up on a resistance. This is our swing period week, and you know, we'll see what happens. The stock market is up, so when the stock market is up, we do see some of the money. We don't see a lot of money coming into crypto until after the closing. So we'll see what happens this Monday afternoon. All right, talk to you guys later. Thanks, and enjoy, guys.